for Options Insight. I'm Abigail Doolittle. Joining me from the CBOE in Chicago is Alan Nuckman of Agora Financial. Alan, thank you, of course, for taking the time. And I think the last time we chatted, Alan, the last couple of times this year, you were bullish on stocks, so great call there. Now we're heading into the first quarter earnings season. It looks like we're perhaps dealing with a little bit of an earnings recession, the first one since 2015, 2016. Do you think that could be a bit of a headwind, or do you think that stocks are going to still climb from here?
Well, I'm still looking for the markets to move. Now, today is a bit of a consolidation day, but we did make some new relative swing highs. This is a momentum market on the move, and it looks like the next stop is the all-time highs. Now, when you talk about earnings, we're expecting negative earnings growth, actually, for this quarter. I'd revised down from a positive, I think, 3% now maybe to negative 4%.
Yep.
So that's a low hurdle, a low bar to overcome, and I think we could have some positive surprises that we've seen after year after year after year.
So you think it's going to turn out to be a low expectation quarter where we could see some beats as opposed to margin compression. It'll be interesting to see whether or not that happens. And of course, we have the financials kicking it off this Friday. And something that really stands out to me there is the divergence between the financials and the S&P 500. Since the last all-time high for the financials last January, down more than 10%. The S&P 500, funny enough, only up about 1%, really has gone nowhere over that time period. But do you think that we can still see the S&P 500 climb higher if that big sector is not participating, in fact, a huge drag?
Oh, definitely. I think the XLF, the banking, the financial sector, is an opportunity, waiting for another breakout, another move to the upside. I think from a risk-reward standpoint, you know, it's held up relatively well, but like you talked about, it's lagged behind and needs to do a little bit of a snapback attack. So from a trader's perspective, I think that that's a good long-term value. You got to remember that we don't have the banking stocks at the levels they were at before the financial crash, whereas all the other stocks have exceeded those highs and much, much, much more. So I think that's a value, and that could carry the markets one more time.
So you think the financials, it's a buyable bottom here. That's an interesting call and a bold one ahead of this Friday.
Yes.
Well, turning to your trading idea and toward Canadian Solar, talk to us about what you like here.
Well, Sunshine Day. Now, this is a stock that's a second chance stock. This had traded between 10 and 20 for 3 full years and broke out in January, rallied to 25, but it's fallen back down. So it's 15% off those highs. A good value at these levels. I'm looking at an option for January. Give yourself about 10 months of time. That January 15 strike is the midpoint of that sideways range that we traded in for many years. So that's a good solid support point to lean on. The 15 strike is trading for about 6. That option is $4.50 in the money, so I think it's also a sector that could benefit from these higher energy prices are going to take to the upside, and I think that's going to be one more catalyst for the overall stock market. You see crude oil continue to climb, and that benefits these solar stocks as well.
Well, perhaps those will be trends that we'll be talking about the next time that we chat. Alan Nuckman, thank you so much for joining us, and love your bullish view here on stocks. Thanks for joining us for Options Insight. And Caroline and Scarlett, back to you.
We thank you so much, Abigail. Great conversation as ever. Let's check on the bullish mood on stocks.